Hello. Today I'm going to talk about an interesting combination of indicators that creates a unique recipe using Jackrabbit. This combination is actually very aggressive or very defensive. It can do very well in a wide range of market conditions, and it is really quite phenomenal. It can be a one-hit wonder, or it can actually be a heavy accumulator, and anywhere in the middle. It's really quite resilient. So without further ado, let's jump right in. Now I've made some modifications to the chart, so let's start with each one. This is a moving average crossover momentum combination. I'm using a 10 and 20 period EMA to create the crossovers, and I'm using a 200 period momentum to filter out only for the direction of the trend. It's really a very simple approach that combines two different indicators in one. So let's go look at these settings. You'll find that they're really very simple. This isn't even a split channel moving average. It's a very simple process. Fast line is 10 candles, slow line is 20 candles. Now the thing that really sticks out is I'm keeping the candle count for two different candles. That is, the signal holds true for two candles. This is important because this is actually how you control how aggressive this moving average is. The more candles you keep for the signal, the more aggressive it becomes. The less candles, the less aggressive. And I will demonstrate that very simply in terms of the uniqueness of this approach. Now for the confirmation. Again, just a very simple EMA moving average, momentum-based 200 period. And I do invert the signals. I don't need to keep a candle count here because anything above the momentum would be a buy signal. Anything below the momentum would be a sell signal. So this one's pretty straightforward. Nice, simple, and easy to use. Very common in trading, to be honest. Next, we get to the second indicator. Parabolic SAR, or Parabolic Stop and Reverse. This one is coupled with the moving average so that it only provides signals based upon the crossover and the momentum. Its settings are also uniquely simple. Here we go for the very basic settings for the Parabolic SAR. Now again, I am keeping a candle count of 2 candles here. So if I get a signal, I hold that signal for 2 candles. I'm going to demonstrate the candles in just a minute. So I'm using Parabolic SAR and the moving averages to create a combination that provides a very unique profit. Now this is on the 1 minute chart. The way I have it tuned, it takes only one position per cycle, and its maximum so far is 1. this could easily be a one-hit wonder. And that's the point of what makes this stand out. I have it tuned to be very defensive for this particular coin. But let's look at the moving averages crossover again. Let's slide it over and let's go down to those candle counts. Let's actually change them. Let's see what happens if I do 3 candles. You'll notice that the total purchases went up. Total buys went up to 10. Trade cycles went to 9. Now let's see what happens if I increase my selling candles. Now not much because I'm using a take profit. But if I was to be using the strategy itself, which does work very well for this, it would have an impact there. But for now, let's just focus on the number of buy candles. Okay, now at 4 candles for the moving average, you see that I am now up to 2 positions per cycle. And I am now up to 10 trading cycles. So you can tune this appropriately to your aggressiveness. Let's put this back down to 2. And if you go to 1, you'll get a more conservative approach. Only 2 trade cycles. So you can see just how easy something this simple can control your risks. The same is true for the Parabolic Stop and Reverse. Let's move this box over. And here we have 2 for buy. Let's move up to 3. Now you'll notice the trade cycle went up and the average per cycle went up as well. So again, you can make this extremely aggressive or extremely defensive. We're up to 7 trade cycles. So something this simple between the different indicators can produce very interesting results where you control your risk. I found for my risk, this is acceptable. I wanted something I can use on multiple coins. And you'll see on the right hand side of the chart where I have all the labels posted. This is actually very easy to do by clicking on the little sun right here and then clicking on the word labels. And you can pick and choose which labels you want. To get your chart to look like what I have, indicators and financials name labels, indicators and financials value labels will produce this chart. So let's actually go through and look at different assets with this particular risk setting. This particular coin requires an average of 2 positions. Now you can set it to a 1 position hold and it would simply take longer to profit out. Now for the record, I have this set at 1% take profit. I want a nice, easy, simple out as quickly as possible. And this particular run right here on the screen, you can see that this is going to be multiple levels of accumulations just by looking at the average, which is the blue line, and the actual price action. It becomes very apparent that this is going to take a while to profit. That's not a big deal with accumulation as long as you are prepared for the accumulation itself. But let's keep going and start looking at other coins. Okay, here's another one that has an average of 3. And again, you see where the price action is compared to the average. Now, I go through these coins so that you can see the recipe in action, not with just cherry-picked coins, but with any coin that in this case is above 1 billion market cap. The kind of coins you should trade in a realistic level. And you can see here that the maximum number per cycle is 10. Not bad, but still maybe a little more than what you might want to invest on this particular coin. Five trade cycles, maximum buys per cycle, currently at 5 with an average of 2. Not bad, and it's a stable coin, meaning that it has a good resiliency rate. Ethereum is the kind of coin that would be worthwhile to hold long term. The entire ERC20 network runs on this coin, so it's not going to really suffer cataclysmically compared to other coins. And there is a significantly higher probability of recovery because of the ERC20 network. Link actually has a pretty good trade cycle count, even though it does have a little bit higher accumulation rate. The accumulation rate might be worth the additional risk for this coin based upon the number of trade cycles. 9 trade cycles in roughly 3.5 days is good. Well, actually, 15 days for this total run. But the 1 minute itself runs in 3.5 days. So you're looking at a good rate. That's almost a little over 1 trade per day. So that's not bad. LTC is another coin. This is a one-hit wonder, and it does do well. Long term for this coin is, well, quite popular. And as you can see, the runs don't last very long. Let's turn off some of the noise. Okay, so here's where one run started, and it lasted this long. Not bad. A second run for here to here. Also not bad. So let's see what else we can find. Okay, this is a longer run. And it just kind of held it out. But the irony is it didn't accumulate here, which is interesting. Since this is an accumulation strategy, it didn't want to deal with any of this drop right here. Again, that's the point of momentum. Momentum and crossover. As you can see, when you look at this entire run, not one single purchase here, because it just wasn't a good market. So this recipe did wonderful as a defensiveness against unwanted accumulation. So okay, here is a shorter run. Not bad, quite reasonable. So most runs are quite short, as we're seeing. So that puts this at really a very good combination. Can the coin be accumulation based? Yes. It can be quite lengthy too, but it very much is a good coin because of its defensive posture. So using Parabolic SAR and a momentum crossover, you're getting a very interesting, almost trend following, but very specifically momentum level indicator. Neo, another coin, a one-hit wonder, 8 trade cycles. This actually is quite interesting. And you can see from here, this drop is somewhat steep comparatively speaking to other coins. And yet, nowhere in any of this is this particular combination wanting to pick up another accumulation. So that's quite interesting and quite telling of the resiliency of the asset itself. Okay, here is a couple of trades. Actually, 3 trades on this screen. All very short term, all interestingly poised to be profitable. So this would definitely be another coin worth considering simply based upon the trade cycles and your risks of accumulation versus what it actually does performance-wise. And as you can see, a lot of markets it just stays out of because they're just not good markets. Here's another one with a huge down drop, and yet it didn't get into it. One position, and it waited for the selling. Did not pick up an extra accumulation. Now, if you changed your candle account, then it probably would pick up more accumulations if your risk assessment could manage it. Here's a very interesting short run, and I do mean very short. It got in, and literally within a couple of, actually about an hour and a half, 2 hours, it got out. This is the perfect way of dealing with risk versus reward, especially on the 1 minute time frame that is usually very chaotic. You don't want to stay in the market any longer than you have to. And for the time frames this small, take profit really is an exceptional way of managing that risk versus reward. Another short one, and on the left side, another short one as well. Quick little scalps. So this is definitely a very opportunistic coin that provides some very interesting choices. But always make sure it fits within your risk versus reward and you plan for the worst case scenario as commonplace. TRX. This coin can be difficult to work with just because there's not a lot of volatility in it. And yet, it still manages to pull off 2 trade cycles. It is an accumulation approach for this one, is definitely. As you can see, an average of 2 positions per trade, with the maximum of 3 being the most recent. There is another coin that can be difficult to work with just because of its unusual market characteristics, and yet it managed to do 6 trade cycles, 1 position each, which for this coin is really quite remarkable. This coin usually has a very high level of accumulation. Another one-hit wonder, 9 trade cycles. Another coin that's difficult to work with as well, and yet it is really very nice here. Let's actually look at some of the runs here. Most of them look pretty good. Very, very little down drop in price action compared to the average. The kind of coin you want to trade. Looks like it's pretty consistent as well. So this definitely looks like a coin that would be a great way to pick up some scalping along the way with a 1% position size. It's limited, it's defensive, and it just shows a high resiliency against the market. Let's get back to the end. XRP. This coin is a difficult coin to work with. It just has a very difficult price action to manage. And as you can see, the average is 3 positions per cycle. I think that's the highest we've seen so far for a coin, average. Only 2 trade cycles. So it's not even a fast-moving coin, really. XTZ is another slow coin, 2 positions per average, but still not bad. Not really something you want to turn down if you're looking for volatility as the driving indicator for your coin choices. Here's a pretty good one. But it does have a higher than normal average per cycles. That's something to be aware of for your risk assessment. So if your position size is $10, you need to really think about the maximum of 5. This would end up being a $100 coin, worst case scenario. And it could be higher. Remember, this is only a rough estimate based upon what you see on this chart for the last 15 days. But it's good enough to set your holding position to 10. Bitcoin Cash. This is a difficult coin to work with sometimes, and yet 7 trade cycles. So it's easy to be able to actually look at this reference, build upon it, and really see a concise and consecutive approach. The approach is everything, in all honesty. Whether you want aggressive or defensive or somewhere in the middle. This coin requires 2 positions on average but 7 trade cycles. Since Binance is going to work their hardest to keep this coin stable, this is actually an excellent coin to trade, even though there is a huge difference between the average of the last position and the current market price. Let's actually look at this. It's interesting that it's only taken so far one accumulation for this drop. And this is quite a significant drop. So again, very defensive and a coin with a very good history of recovery. This coin has been known to also make 300% rides if you can catch it just right. So it's certainly a coin that is worth looking into and trading. Its holding time looks to be a little longer than a lot of other coins, but that could very well be worth it given the type of coin it is. It has a very specific reason for why you would want to trade it. Everybody pays their fees with it on Binance, so it's going to be bought and sold regularly no matter what the market condition is in general. And that is a strong advantage for any utilitarian coin. Having a high number of trade cycles for this coin only adds to its value of trading it in context of volatility. In fact, you can see it does a pretty good job all the way around. Now, of course, there are risks, and those risks need to be countered and looked at carefully. Paper trading is the best way because it's easy to look back on the market and say shoulda, coulda, woulda, why didn't it do this? Why didn't it buy there? Why didn't it sell there? But that really is meaningless when you are trading in a live market. The human brain, just like the indicator, is going to make best choices. Backtesting or looking at historical data is the worst thing in the world in many ways for seeing the success of a strategy. It gives you an idea, but when you're faced with not knowing what's to come, and you have to make a decision based upon the moment, a recipe like this does a good job, and probably better than a lot of what many humans would do when faced with the same exact market conditions and the same exact level of uncertainty. Now we are right back with Bitcoin. Now let's take a look at different time frames, because that's going to tell you with the current settings how much accumulation or how defensive is a recipe going to be. Okay, 1 trade cycle. Not bad. Let's keep going. 3 trade cycles. The accumulation looks like it's going up, but it's still acceptable. 5 trade cycles, 1 hit wonder on the 7-minute time frame. Not bad. You can see it's in an open trade, and the distance between the price action and the average is about 36%. Nine trade cycles. So you really begin to see that it doesn't accumulate even in higher trade cycles. If anything, it looks to be the same resiliency all the way through. Now, of course, you could tweak it for a particular trade cycle or for a particular time frame that you want. For example, a 15-minute would yield higher profits than the 1 minute. But I wanted to demonstrate the resiliency as it was, because usually higher time frames require more accumulation. And as you can see, that's not the case, because higher time frames often show the big market drops, the steep nightmares that a lot of people get stuck in. And you don't want it accumulating on the way down. You want it to wait to the bottom to accumulate to lower your average overall. You don't want to be trapped by the harvesters. As you can see, it's still a big market drop, but no purchases. In fact, let's see when the last purchase was. Okay, here's the last set of purchases. Not bad. In fact, it caught the whole market in an upward swing. So that's pretty good. But we're not done yet. We need to keep going and go to 2 more time frames. Oh, now we see a real big run. And it bought at the top. Not too happy about that. But it bought only once. So that's a good thing. Okay, here is some other trades that it made. And it did quite profitable, actually. So it looks like overall this is pretty resilient. Now let's get to the highest time frame of all, roughly the 4-hour one. And as you can see, in every single time frame, the risks never dramatically increased. That is the kind of recipe we want. We want to be sure that no matter how long we let it run, the risks are going to remain constant and consistent no matter what the market structure looks like. Now, of course, it's not going to be perfect, but it is reasonably resilient that you can base a budget on it and realistically see just how well it's going to perform. So the next step for this particular recipe is really to paper trade it. See what it does with real live market data. And let it run and accumulate and see how well it does. And then compare the results over time. So, crossover momentum. Powerful combination. Adding Parabolic Stop and Reverse to it only just sweetens the pot. As an accumulation approach or a one-hit wonder, this combination simply does well with the right coin choices. Like, share this video, subscribe if you're not already. Let me know what you think of this combination. Is this something you would choose to use? What changes do you think you would make to it to make it more profitable? Would you choose a slightly lower profit level based upon your exchange? Let me know. Until next time.